Hello and welcome to this week's Humble Investor Bull Bear Market Report. My name is Adam Straseske, and here is our agenda for today. We're going to go over the broad market readings, and then we're going to go over this week's operating plan. So first things first, we always want to look at, are we in bull or bear market territory? Said another way, are we in a risk on or risk off stance? We are still in bull market territory. The S&P 500, represented by this green line, and the MSCI All World ex-USA Index are greatly outpacing Treasuries, represented by this red dotted line down here. On a 12-month rolling basis, very comfortably. So we are still in a risk-on stance on the longer term, according to momentum, and we will be in that position until these lines fall below Treasuries. As far as the shorter term risk of the market, the correction risk, I'd say we're in a pretty good chance of a correction. It was basically a neutral week last week. We're still in overbought territory. If in fact the trend has changed to the downside, then we should see a pullback in the market. I don't know if we'll get it. We're pretty much in this trading range right here. You can see I've got it outlined later in another chart, but basically you can see it's right about this level, and then you go all the way to the top right there. The stage of the S&P 500, we're in a trading range where you could still say we're still in a broad bull channel, depending upon where you draw the channel line. You can see last week we had a neutral bar represented by this doji here, and we've got this triangle pattern forming, so this could be the final flag to the upside, or just not sure. But it was a neutral week last week, and anything below, a sell signal will be below this bar, and it was weak follow through the bulls. And so we'll see it this week if the bulls can get some more upside and test the top of the trading range here pretty soon. As far as our operating plan, we still like preferreds, U.S. large caps, and U.S. growth. And then here are all of our weekly swings. So we've got quite a few of them. Here's a look at U.S. large cap and U.S. growth, and this is what I was mentioning by the channel line. You can see we're pretty contained within there. And then here's the trading range outlined right there. So looks like it was up about 0.25% for the week as far as the U.S. large cap, and the U.S. growth was about the same. So it looks okay for those two. They look very similar to the S&P 500, and of course the bulls would like to see it hold above this level here and test to the upside really quick and eventually break out. Here's a look at oil. We're up 1.5% this week. We did adjust the stop up this Friday, and a little bit above $56, but it's in a nice breakout, pretty good follow through, and so it was enough to justify moving the stop up and take some risk off of the table. Now on the upside, if it breaks out of this channel line, then we'll look at taking some profits there as well. U.S. Treasuries down 1.6% for the week. Just can't catch a break in Treasuries. They just continue to slide to the downside. And if we break through this double bottom right here, which it looks like we're going to, then we're more than likely we're going to get stopped out. And like I've said before, this is an index, and the actual vehicle that we're in is above the trading range, or it's still within this channel, but it's at the bottom of the channel. So like I said, if it breaks to the downside, more than likely we're going to get stopped out of here within the next couple of weeks on U.S. Treasuries. Australia down 0.61% for the week, and just doesn't look good for it. I was hoping we could see some more advance to the upside this week, but we got stopped at the moving average. And I don't know if we're going to get a second purchase, get down to the second purchase range here, but it just doesn't look good for Australia right now. Hopefully this is the last push down of 3 pushes. So we got 1, 2, and then this will be the third push down. We'll see. Don't know, but we've got a stop down here, and if we hit it, then we'll get out and move on to the next one. Brazil up 1.67% for the week. It's showing some life again, and hopefully we will see the continued advance to the upside. Don't know if we will, but we've got a second purchase range down here. We're still within the channel, and it looks like it might hold on this moving average. And it fell within this last trading range, so we're not too happy about that as far as bullish price action, but we'll take it right now with up for the week over 1.5%. And then here's the MSCI EFA Value Index up 0.77%, and we've got some good follow through, some good bull bars here, and hopefully we can just continue to see that happen. But we're right in where we got the first purchase was right there, about somewhere in the green line over there. Pull back. Never got into our second purchase range. If it does get down here, then we'll look at getting some more. But right now it looks good, and we've got an initial stop down here at the $50 range. Nothing new for the monthly trender, the weekly swing, or the scalps. We're just going to hold on to what we've got and watch it really closely. See if we get any second purchases or any stops hit any stops this week. With that, have a great week, and we'll talk to you next time.